Righto, well, good morning, everybody. Welcome along. Delighted that you can join us. Stephen Cornter is my name, and I'm one of the ANZ Business Training Managers. A very warm welcome. In terms of our presenters today, I'm delighted to introduce and welcome. So Sam Cherry, and we'll get them to, there he is, Sam, who's just come back from week's holiday over in Oz, so he'll be all refreshed and good. And so Sam is a director and partner of TABAK Business Sales. He's based in Christchurch, and they have offices throughout the country. But in his previous life was, or still is, a chartered accountant, so comes with a wealth of experience. And so I've known Sam for a long time, and I really do welcome his time and experience on this topic. And also Anthony Bowe. Anthony is a relationship manager with the ANZ. Anthony is based in Lower Hutt in Wellington. Welcome along to Anthony and to Sam. So today's topic will just disappear off the video. I do need to share with you our disclaimer. And I suppose the first thing is that today's webinar, we are not discussing any financial products or services or providing any financial advice. And the information we believe to be true and correct is at the time of publication, but also this is very much the situation or environment that taking your own personal advice from the professionals that are around you is critical. And but please do take from today some ideas, some concepts, and please do use the professionals that you have in your area. And the reason that we've got buying and selling as part of the one webinar, I think it is just so important that both sides understand each part of the equation. So if you're a business buyer, then what might your expectations be in terms of how well prepared the business is for sale? And if you're a seller, just thinking about the perspective of the buyer, that what are the things that they're going to be asking for or schooled up to look at in terms of investigating the purchase. Right, that's enough from me for now. I'm going to hand over to Sam. So welcome along, Sam. Pleasure to have you join us, and we're going to shift over to you. And so I'll leave everybody in your capable hands for now.
Excellent, thank you, Stephen. So yeah, look, whether you are buying or selling, as Stephen said, it's actually a very good idea to pay attention to this whole conversation, because if you're going to buy a business, which is the majority of you, one day you're going to want to sell it as well. And it's always good to hear from a vendor's point of view or see what a seller needs to do, and that can help you in the buying process. So if you are here wanting to buy a business at some stage, why would you want to buy a business? There are a few very good reasons why. The first and most important is you're buying an existing customer base. So ideally, you're going to be buying revenue and income from day one. Whereas if you're starting from scratch, you have a great idea. It can be sort of 12 months until you're making a good profit. So you need to have money in the bank regardless whether you're using that money to buy a business or to start from scratch, because you will need working capital. So you're buying a customer base, you're buying relationships, you're buying ongoing revenue. You're also buying resources, and this is actually very important at the moment. Quite often people who are buying businesses, and this is more larger acquisitions, is they don't just want the customers, is they want the staff, because nobody can get staff at the moment. It doesn't matter what the industry is. Everybody is very tight on resources because we haven't had people moving here, whether they're concrete or they're running one crew instead of two crews, etc. Resources are very important. So you're also buying staff and key staff who know what they're doing in this business you're purchasing. Obviously, systems, they have a good system, whether it's a quoting system, an invoice system, a point of sale systems, or just general processes that are well documented. You don't have to write that from scratch because it's already there. So everybody has a dream of wanting to be their own boss, which is great. You've just got to be very, very careful because it's not as great as people make it out to be sometimes. It is stressful. You can't leave at 5:01, get home and forget about it. You're constantly thinking about your business. You're constantly thinking about cash flow. So you really, if you are looking at buying, just take a step back and do some reading and understand that there is a lot of work involved. There are sleepless nights involved. It's exciting. I mean, I'm in business myself. I love it. I could never go back. I don't think I am employable. But at the same time, sometimes you do wish you could just switch off, like my 2-week holiday in Australia. I was working every day. So where do you start? Look at yourself. What are your skills? What are your strengths? What are you good at? Some people just focus on the businesses that make the most money, but obviously those businesses are the ones that are going to sell for the most money. So what are you good at? Are you good at customer service? Are you good at crunching numbers? Are you good at building things? Find out what you are good at and what you want to do and what you're going to enjoy, and then focus on there. It's best to know what businesses you don't want from the onset. We don't sell a lot of hospitality at TABAK Business Sales. That's just because it is very niche. I know other brokers very well in competitive firms, and I happily refer on to them. That is what they do. They have those buyers. So I know my skills and strength isn't selling cafes, but I know that other brokers do, and I'm happy to refer on to them. So again, what industries are you into? Now, funding, that's what Anthony's going to talk about later. It's not easy to access funding. I still get people thinking that they can borrow money to buy a business and they can borrow against the business without any security. And sure, it is possible. But the first thing that I want to know, and the first thing that a bank's going to want to know is, okay, have you got a property and how much equity have you got? Ideally, that's how you're going to fund that business. So you need to get your ducks in a row, start talking to the likes of Anthony and the bank very, very early. And then what's the market doing? It's changing at the moment. The last 3 years have been very interesting. We had a record year last year, and this year, if we do half that, we'll be happy, because there's lots of talk of global recession. So you've really got to keep an eye on that market. That does affect business values, but at the same time, a good business will still sell for a good amount at any time of the year, or depending on the market, because business fluctuates, the market fluctuates. But if you're looking at something over a 10-year term, it's like property prices. It's always going to go up in value if everything's going well. So what to do? Plan. Very simple, really. As I mentioned, talk to your bank very early, see what you can do and what they'll be willing to lend on, and talk to your accountant as well and get them on board very, very early. Speak to brokers. Talk to as many brokers as you can, not just one. Get on their databases, have a chat about what's out there. Let them know what your budget is, what you're looking for, and when you're wanting to purchase a business. Don't just sit there and jump on Trade Me and think the perfect business is going to pop up there, or jump on NZ Biz Buy Sell. Talk to the brokers early, and I'll tell you why, is that a lot of the very good businesses that we sell, they don't even make it to market, because we meet buyers regularly and they tell us what they want. For a vendor, if I can say to them, I've got 4 buyers who would be keen on your business, I can introduce them to them tomorrow. They would rather that than me push it out on the internet, push it out to our database and have 50 inquiries and have to go through and vet them all. So become one of those buyers. Get onto it early, speak to a broker, let them know what you want. If you see a business that you really like, do not play it cool. Do not try and play hard to get, because you will miss out. If somebody likes a business, they will come to me as soon as I've read the IM and go, Sam, I would like to flag my interest on this business. I'm just going to be speaking to my accountant. So then right now they're in the A category, and I tell that to the vendors. If you don't return my calls or respond to my emails, and then a week later you get frustrated that the business is under contract, that's because you didn't get back to me. So put it in writing. I am interested in this business. What are the next steps, please? And that way you'll always be told what's happening if there's other buyers out there. The good businesses sell quickly. I have a business sold this week. I've actually had it on the market for 2.5 years. It's a great business. It just took a very niche kind of buyer. It's a factory operation, and we finally found that buyer. So most good businesses will sell very quickly. Some good businesses will take a while if it needs a niche buyer. But at the same time, don't just look on a website and see what stock we've got, because a good business will not sit there for a long time. So get in there early and speak to all your professionals, bank, accountant, and a business broker. A lot of people ask me, how do you value goodwill? And there's no straight answer to that. We have people who have a small business, say there might be a website design agency or something, or a small retail, and I've got 20,000 followers on my Facebook. So surely that's worth heaps, and it's not. It could be because you're posting jokes on your business Facebook page. Those followers need to purchase things from you, and that purchasing things will then derive an income, which will make a profit, and then we value the business. And the difference between your stock and your fixed assets and the ultimate purchase price, that is called intangibles, which is the same as goodwill. So that's ultimately how goodwill is valued on the front page of a sale and purchase agreement. But you can increase that goodwill number by having fantastic customer relations. Can you get contracts locked in place? How good is your brand? But remember, all of these things need to help you derive an income. Contracts or no contracts, yes, that will increase the purchase price of a business because everybody wants locked in contracts with customers. So that is some way you can increase the goodwill factor on there. So yeah, long story short, you can't just put a number on goodwill. Some people do value goodwill separately. We don't, and most valuers don't. We value the business, which I'll talk about in a moment. And from there, the difference between that purchase price and any assets is the intangible asset, which is goodwill. So how do we value a business? Now, this looks like a lot of words on a page, and that's because it is. I won't get too technical here, but you will hear people tell you, you'll hear your accountant tell you, you will hear others tell you, oh yeah, it's 2 times, 3 times, or 3 times. The real question is 2 or 3 times what? And there's two ways to look at it. So EBITDA is what everyone talks about, but EBITDA is actually profit after everybody has been paid market rates, including the owner. So that's more for big businesses where, say, they're making 500 grand profit. That's after the owner has been paid, their salary has been swapped for what is a market salary, and the profit after that is EBITDA. EBPITD is actually earnings before the owner has been paid any wages. Now, that is for small businesses. So a small business, they might be making 150K profit. That's actually being paid to the owner as his wage. That's the EBPITD. That business may not have any EBITDA because if that's a market salary, 150 grand, then there's going to be zero profit afterwards. And that is a lot of small businesses out there. So make sure you get those 2 numbers right, because obviously if you're multiplying 0 by 3, you get 0. If you're multiplying 150 grand by 3, you're getting 450K. So that's the number you've got to make sure you're looking at first, and who is doing what in the business, and what is the market rate for that person. So how we value a business is that we derive that number, that profit, the EBITDA or the EBITD. We look at the business, we look at the risk, we look at market data, and then we apply a return on investment, or actually as a multiple. So this is going to be a 2.2 times EBPITD, for example. And that is based on the business, that is based on the risks, that is based on market data that we have of similar sales in the last couple of years. That is how we would value 90% of our businesses. There are many other rules of thumb. If you're looking at accounting fees, for example, they can be based on cents in the dollar. So, okay, you got $1 million of fees, you might get 60 cents or 65 cents, so that's $650,000. When we value these things, we do look at that, but it's more, usually these days it's a sanity check on that capitalized earning or multiple approach. A cafe, for example, I think they have some rule of thumb, which is like 23 times weekly revenue or something. So you may look at that, but you're still going to go back to a multiple of income, and you're going to use that as a sanity check. There are businesses that have a huge amount of assets in there, and sometimes the market value of those assets ends up being the value of the business. Say if it was a tour bus company and it had $1 million worth of buses, but it only made $150,000 profit. You're only going to sell that business for the market value of those buses, and that is just the way it is, and it is quite common. Then obviously you have your liquidated value if it's going under, and then stock value. We have some businesses that have huge amounts of stock at the moment, purely because of the supply chain issues in the last couple of years. I've doubled their stock numbers, and it makes it very hard to value because stock plus intangibles can end up being quite a high multiple. So we then look at how we can justify a 4 or 5 times multiple. We can, if the majority of that business sale is good quality stock that can be sold. And yes, market data. We're around the country. We've got, I'd say, over 1,000 sales in the last sort of 10, 15 years, and that's all collated on a spreadsheet. So we have access to that, between us 20 brokers around the country for TABAK. We also have access to BizStats, which is a sort of an independent young guy. Just bought that business off somebody in Wellington, and he's revamping it. It's a great source of multiples and what businesses have sold for, but we don't know much about those businesses because we didn't sell them. Whereas our own internal data, we know the business, we can access the IM, the sale and purchase, etc. So looking to sell. Now, even if you're looking at buying, this is going to be very insightful for you as well. So what are the best ways to go about selling your business? As you can see, there are many, many different ways. External sale is obviously my favorite because I'm a broker and I get to sell it and make money. But look, internal sale, and the accountant to me always talks to my vendors and to see if that's an option, because it's usually a better option. It's a lot cleaner, it's better for staff, and it's better for customers. You know, are your kids in the business? Do they want to buy it? Used to be very common 20, 30 years ago, not so common now, because you've got, you know, Jane's off being a lawyer in London and someone else is in Melbourne. So not very common. So then we look at staff. Do you have good quality staff, especially at the moment? Is there any way that you can give them a leg up and have them buy shares in the business? The issues with that is how are they going to come up with the money? You don't want to sort of finance or vendor finance it too much. And do they have the necessary skills? They may be great at what they're doing, but can they actually run a business? Because there's a lot more layers to running a business than just turning up 9 to 5 and working hard. External sale, open market sale is what we do as a broker. We'll go to market. For us, that's not advertising it on Facebook or anything. That's going to our internal buyers database, which is about 5,000 buyers strong. We send a very generic flyer about the business, doesn't name it, just has a few details. Then people inquire, sign an online NDA. I then vet that person, and then if the vendor's approval, we send them the full information memorandum. Quite often that's linked up with a trade sale. That is when another business, maybe in the same industry, they will look at making an acquisition of this business because they see synergies, they like the staff, they like the customers, and they will tack that onto their existing operation. For them, the payback period is usually a lot less because a lot of those overheads and operating expenses they're incurring, they're already incurring in their existing business. So they are more looking at margins and gross profit. Quite often happens with larger businesses. So what are the good sales structures? Big fan of things being clean and simple. So I'll give you $1 million for your business. It'll settle on 1 December. Happy days, it's a done deal. Doesn't happen as much for the last year or two, obviously, with fluctuating revenue and fluctuating profit and wage subsidies and forecasts and recessions. Quite often there is retentions attached or special clauses, so an earn-out. So if somebody's saying they made $2 million revenue for the March 2022 year, and we're going to make $3 million for the March 2023 year, then we'll say to the vendor to put their money where their mouth is. So the business value might be $1 million. We'll give you $750,000 on settlement. We will retain $250,000. If it reaches these revenue figures that you've said it's going to, we'll then give you the other 250 grand. So that's just one example of how to structure it. That mitigates the risk of a buyer to say, okay, well, if it doesn't reach that, and you have a tear down, so they're not going to get nothing if it's 99%. But at the same time, it just means that if it doesn't perform, then the buyer is a little bit protected. Now, we do discuss with our vendors vendor finance a lot more recently, as it is getting harder to obtain funding for a business purchase. Never a good option for a vendor, especially if they're retiring. But at the same time, if we found the perfect buyer and they just can't quite get the funding, or they're a couple of $100 grand short, we go, hey, look, would you be prepared to finance $200,000 over 2 or 3 years at 5% interest? You've got a general security agreement over the business, and they're really just giving a leg up to a buyer. And then if they know that is the right buyer for the business, they usually, begrudgingly, they will do it. Or we can do a part sale or a share sale. 90% of our sales are asset sales. So the buyer will set up a new company and they'll set up new bank accounts, and they will literally buy the fixed assets in the stock of the business, which then go onto their balance sheet, and then they'll start invoicing from the new company from day one. Whereas a share sale, you're buying shares in the existing business. It's a lot more messy. Lawyers love it because there's a lot more work involved. You've got to look at warranties and tax obligations, etc. Instances where we have had to do it is where there might be visas attached to that company, which can't be transferred, or there could be, recurring revenue and thousands of customers all linked to this company. Changing the bank account details would be a nightmare. So then they do a share sale. It's a lot more complicated. We can't use an actual sale and purchase agreement. The lawyers get more heavily involved, but it is definitely an option if it needs to be. So what are the risks? Lots of risks. I won't run through all of these in detail, but look, the owner's role. A lot of owners love the fact that the business is so reliant on them. What you want to do if you want to sell is you want to spend a long time doing the exact opposite. You want to be able to go away for 2 weeks to Australia and not have the phone ring every 10 minutes and have staff that can deal with everything. If you can distance yourself and almost make yourself redundant from the business, obviously you can't do that for a small business. I'm talking about the bigger businesses, but if you can do that and you have a manager in place, that is going to be music to a lot of my buyers' ears. Staff, obviously staff are getting poached left, right and centre in all industries. So make sure your staff are happy. If you're meant to give them that pay rise, don't think you're just going to leave that to the new owner. Do that, get that locked in, because at the end of the day, otherwise those staff are potentially going to leave before the business is sold, especially if they find out the business is being sold. So systems, technology, plant and equipment, carry on as you are if you're selling your business. If you need to replace something, replace it. Don't leave that to the other buyer, because they'll find that out and they'll just deduct that off the purchase price anyway. So carry on as usual. Now, discretionary cash. I was an accountant for years. I had a lot of small business clients. A lot of them were trades. And yes, they did pocket a lot of cash, and great idea at the time for them. But I always said there was two things that was going to be affected when it comes, by pocketing this cash. And this, what I mean by this is somebody pays you in cash, you pocket it, you don't declare it, put it through the system, put it through zero, is your profit's then going to be minimal. So you go to the bank to get a loan, they're not going to lend you money. And then you go to a broker to sell the business. Well, then if the profit's not there and you're looking at a 3 times multiple, it's going to be that profit less all that cash you've banked. So you might save yourself a few dollars short term, but in the long run, it's actually going to really, really hurt you. If you have been doing it, and of course, everybody doesn't do it. But if you do, start banking that cash, start recording all of those sales, do that for a 12-month period. You'll see your profit go through the roof. Oh no, you've got to pay a tiny bit more tax on it. But then all of a sudden, if you're looking at a 3 times multiple of that profit as a sale price, you're going to get that back tenfold. And financial history, have everything ready, have your accounts looking tidy. Most people are on zero these days, which is great. Get it, April to September now, we're halfway through the year, get a nice year-to-date management report or profit and loss at best. Do a stock take. If you've got stock in your business, get that current. All those things are going to be a lot helpful. So there are, unfortunately, lots of influences out there that are out of your control. Obviously, the industry, if I can talk about accounting again. People have talked for years about the accounting industry is going to be made redundant, and we shouldn't be studying accounting. Not true at all. Accountants, we are so under-resourced. We can't find staff. There's work coming out of our ears. And if I have a set of accounting fees, I'll sell them tomorrow. So just be careful with what you hear. Obviously, the economy, things aren't looking too crash hot. According to economists, I'm always trying to be optimistic. But again, what goes down goes up, and what goes up goes down. If you look at the last 10, 15 years, that's just the way it goes. So just having a look at it and going, are we at the bottom of this recession, or has it just started? What's going to be the outlook of this business I'm wanting to sell? Landlord lease. If you're in a good premises, then make sure you have locked in a good lease with your landlord. If you're not in a good premises, or you think it's better that the new owner might want to move, then don't lock in a good lease. Stick it to month if you are, gives them flexibility. So rule of thumb is lock in a very, very long-term 5+5 lease. It is a good rule of thumb. However, if you think the location isn't ideal, then don't. Leave that for the new owner to decide. And yes, look, bank lending, Anthony will talk a lot more about that. But that does a lot of banks. They always tell me that they're open for business, and they are. However, things are tough. I know this. It just means that a buyer just needs to get more ducks in a row. And as a vendor, we need to make this as best as we can. So that's where my information memorandum comes into play. We need to address any concerns a banker may have and put that in the document. Everything we can do to make this a good looking business for the bank. So what not to do? Key is, don't lose interest. We've had vendors come to us and we've appraised the business and we've said, look, it's worth $700,000. They thought it was worth more. I've gone to another competitor who's basically said, yeah, fine, I'm sure it's worth $1 million because they wanted the listing. And then in that time, the vendors got excited. They're going to make $1 million. They take their foot off the throttle. So what happens each month that goes by, because you don't sell a business in a month, it can take 6 months. revenue's gone down, profit's gone down. So a buyer's looking at it and they're actually looking at last month's profit, not last year's profit. So they've lost interest. The business is starting to go down. So that business that they said was worth $1 million and we said was 700 grand is now worth 500 grand. So you need to ramp up every week's sales. Is last week's sales is way more important than what you did for the March 2022 year. Ramp it up, get new customers, grow. So don't get sidetracked due to being bored. Focus, because everything that you do now is only going to help you. It may take a year to sell the business, and imagine if we can show that in that year, every month is growing. It'd be fantastic. Don't overcapitalize. So yeah, don't spend money on what you don't need. If you need new assets, do it. Otherwise, just really watch what you're spending. Get a really clean looking profit and loss statement and a really tidy balance sheet. Don't overvalue the business, which is what I just talked about. We know what we're doing. We show that with market data. We're not going to try and undercut the business, but if we think we can get extra, we generally sell within 5% of our appraisal price. So we know what we're doing. However, if there's a broker out there that just goes, oh yeah, you tell me what you think it's worth and we'll chuck it out there, don't do it, because it will sit on the market for a year, 18 months, because everyone thinks it's overvalued, and then your business is dead in the water. And it's going to take a long time to sell it and you won't get the full value. Look, don't sell it yourself. Look, if your business is worth 100 grand, then yes, sell it yourself, to be honest. And because brokers have minimum fees, and I do tell people this, if I get something through, I say, look, you're better to do this yourself. Sell it on Trade Me. These are what you should do. I give them a bit of a template because ultimately you're going to get 10, 15 grand eaten up by a broker, and all they're going to be doing is advertising it on Trade Me and their website, because buyers for those smaller businesses usually aren't on our buyers database. If your business is a bit more substantial, use a broker. You will get a good value for it. There is a lot of work involved. We can give you multiple buyers and hopefully, a good result. Yeah, don't sell on a declining trend. Unfortunately, when you have no choice, you have no choice. There are businesses that had a cracking March 21 year, cracking March 22 year, and now usually it's actually due to resources, as I mentioned before. They don't have staff to do the work. The work's there. So they are actually going a little bit backwards. The reality is, if they want to sell, we'll sell it. Or we say, look, if you can wait till they can get some more staff, give it 12 months. If we can get back to what you were doing a couple of years ago, why don't we just reassess? But yeah, there are some owners out there that are tired. The last few years have tuckered them out. And so we want to sell regardless. And they know they may just have to take a bit of a hit on that. So if your business is sold and price agreed, we're under due diligence. So yeah, it's not actually sold yet. There are a few issues that you need to be aware of. Finance funding. So a business will be, it'll be under contract pending, and a clause will be subject to the buyer finding funding. So they'll be going to the bank with the information memorandum, and ideally I would have got the buyer talking to the bank a lot more early in the piece. Gone are the days where they can just sign a sale and purchase subject to finance and then go to the bank. Nowadays, I need to know that they've already spoken to the bank about the business and their accountant, and the bank has given them a very loose, yes, we think we could help you with this one. Landlord lease issues, as I mentioned, quite often a lease reassignment can take a lot longer than planned. Even if it's simple, landlords like to take a long time. They get the lawyers involved. I've had some landlords then try and get the buyer to sign a brand new lease, and then obviously we're having a deal confirmed. It has to be pushed out by 2 weeks while they're still going through the lease. So making sure that your landlord is aware that you're selling and have them ready and willing and able to approve that reassignment to the buyer. Making sure the purchaser is actually committed and reasonable. That's my job. I wouldn't want to give you a buyer that I don't think it is. I wouldn't go to that length and waste our time. But just making sure that they are actually 100% dedicated to buying that business. And you get a good feel when you meet a buyer once you have that first meeting and you start working with them. And we've had some vendors actually go, look, I know this person's got money, they can buy it, but I don't feel comfortable with them. I don't think they'll be the best buyer in front of my customers or staff. And then we can just veto them, absolutely fine. So yes, lots of issues out there, whether it's earthquakes, financial crises, world wars, COVID, etc. Seems to be more common than not now. So you've just got to navigate it and just be aware that that may happen even under due diligence. Something may pop up. Yeah, we have less than 10% don't go through once in due diligence. So we just need to make sure that both parties are 100% committed to buying this business or selling this business. I say to buyers and I say to their accountants, when you make an offer and we have a sale and purchase agreement that's signed, that is the purchase price. Now, due diligence is for you then to go through the information random, get more information, and for you to be satisfied that the information that I have provided and the vendor has provided is correct. It is not for your accountant to then go through and try and find reasons to drop that offer price. You've made the offer, that is the price, unless there's something material that is going to be the offer. And it is a very good way to really annoy the vendor if you then go and try and find reasons to drop that price under due diligence, because there could have been other buyers in the background that will pay that same price as well. You could be working with that vendor for up to 3 months if it's an extended handover. So you really don't want to piss them off too much. The offer is the offer, unless there's something material that impacts that value. Look, and that is actually me. I think there has been some questions, but I think that Stephen mentioned we'll go through them afterwards. But I'm going to jump out now and hand over to Anthony.
Thank you for that, Sam. So today, what I'm going to be talking about is what information that banks need, and then explain why we need it when we're looking to fund a new business. When you're approaching your meeting with the bank to borrow money to fund a business, treat it like a job interview, and that you need to set some time aside to prepare, and you need to conduct some research about the business that you're looking to buy, or the business that you're looking to set up. Then you want to think about the type of questions that you're likely to be asked, and then prepare the answers. Your business banking specialist is going to need certain information to assess your application. Now, if you understand what information is required, you can provide this information up front and be better prepared to answer any questions that your bank is going to ask you. Now, the benefit of being prepared is it's going to instill confidence in the lender of your ability to operate a successful business and be able to repay any lending that you take out comfortably. Essentially, your goal is to try to build some credibility. So that moves us on to so what information are we going to need? Now, I mentioned before that you should approach your meeting with the bank like a job interview. So when applying for a job, you're going to provide any prospective employer with a resume, as in the CV. So if you're applying for a business loan, the bank's also going to be looking for a resume. But in this case, we're going to need a business plan. Then, once we have the business plan, we're going to look to have an understanding how much you're looking to borrow, and that's going to be based on, what are your total setup costs of the business, or what the cost or the purchase price of the business is going to be, less how much you're going to be contributing towards the purchase price or the setup costs. Now, the key here is when you're looking to what your setup costs are going to be, it's important that you think about everything that's required to get your business up and running. And now some of these things that you need to consider is going to be like your stock, any equipment that you need to buy to get your business up and running. If you're leasing premises, what are the fit out costs? So what are fit out costs? What's that going to incur? And if you're buying a business, what's the purchase price of that existing business? And then, do you need any initial working capital? Now, what I mean by initial working capital is that when you open the business on day one, you're going to start incurring expenses. However, your business may or may not be able to generate enough income to come through to meet those expenses. So you need to understand how you're going to bridge that gap between when you open the doors on day one to when the business can generate enough income to come through to meet those expenses. So then once we've established the setup costs, the key thing here is we need to know how you're going to, how much you're going to contribute towards those setup costs for the purchase of the business. Now, rule of thumb is we're looking for you to put in 50% towards the setup costs. And that's probably where a lot of people will become unstuck and what probably perceive that it's a little bit more difficult to buy a business these days. Because that 50% is generally going to come from equity in a residential property. And given what's happening to properties at the market at this point in time, people are losing that, haven't got as much equity in their properties as they once did. So for probably the last couple of deals I've looked at, recently, that's been the case. And then we've had to look at, well, what other savings do they have? Have they acquired any savings? Or have they got, do they need to go out and get investors and bring them on board? Okay. So the key with the setup costs is that if you already put money towards those setup costs, you need to let us know about that, because that's going to form part of your 50%. So I've had conversations where we've gone through all the setup costs and how much they're looking to borrow, and they've come short. Then when we've drilled down a little bit deeper, they've said, hey, but I've already spent this money over here, but they haven't told us about that. So we can then bring that into the equation, which strengthens the application. So then once we've established how much you're looking to borrow, we then need to know how you're looking to repay the loan. So we're going to be needing some key financial information. So for an existing business, we're going to be asking for 3 years of financials from that business, plus any forecast which shows the impact of any proposed changes that you're likely to make to that business. Now, most business owners will if you're buying an existing business, most people think, yep, I'm going to do A, B, and C to the business. But we need to understand what the impact of those changes are likely to be. So if you're setting up a new business, that's a bit harder. So therefore, we require a profit forecast and a cash flow forecast. And here's the key: it needs to be accompanied with the assumptions that explain how the numbers contained in those forecasts have been determined. That's the most important thing. We need to understand the rationale behind those numbers. Then we want to know how you're going to secure the loan. So what security are you going to provide? And the most common way is to use, your residential property, either your own property or a rental property. Like I said before, given the current market, there's not enough people, the equity that people have in their properties has been eroded. So then we may need to look at, well, how can we secure this, any lending against the assets of the business? And depending on how much you're looking to borrow, we may need both. We may need security against your house plus the security against the assets of the business. As well as bankers looking at the business, we also need to understand the applicant's personal situation. And to do this, we're going to need a personal statement of position. That's a list of what your personal liabilities and assets are. And that needs to be accompanied with a personal budget, and then confirmation of what other income is going to come into the household, such as your partner's income or any rental income. Now, the reason we need this information is that we need to ensure that you can comfortably meet your personal commitments. So if you understand that, you can provide that information up front. So to recap, I know there's quite a bit there. So what information do we need? Well, we need a business plan. We need to know how much borrowing, we need to know how much you're looking to borrow based on the setup costs of the business, or and then how much you're looking to contribute towards those setup costs. Need some financial information. So for an existing business, that's the 3 years worth of financial information. If it's a new business, then we're going to be looking at those forecasts. What security you're going to provide the bank, and a statement of position and a personal budget, along with confirmation of any other income that's going to come into the household. So that's quite a bit of a comprehensive list, but there's 2 key pieces of information required by the bank, and that's essentially the business plan and all supporting financial information, such as the financials for the existing business and any forecasts. Now, providing the bank with that information up front is going to show the bank that you've thought carefully about the basics of the business, and it's going to help build that credibility. So that's about the what. So what information we do need. Now I'm going to talk about why we need that information. Now, it doesn't matter if you're borrowing $500 or $500,000 or $500,000 for a business loan. The principles are exactly the same. And that, remember, we're going to be assessing you and your ability to operate a business. So your objective is to establish credibility, provide comfort to the business specialist or the business lender that any lending that we provide you is going to be repaid, which is why it's important that you provide the bank the business plan. So now some of the information contained in the business plans can include how you're going to run the business. So it's like Sam alluded to before, we want to know what skills and experience and qualifications you have to run a successful business. Now, if you've identified any gaps in your skill set, or if you don't have the ability or time to perform all the functions to operate a business, because I've never actually seen anyone who can actually do that. We need to know how you're going to mitigate those gaps. For example, are you going to be employing any key personnel to perform those key functions within the business? If so, we need to know who they are and what skill sets they have. We also need to know who's going to be involved in the management of the business, and who else is going to be involved in your wider team. So your accountant, your solicitor, and are you going to be employing a business mentor? So essentially what we're trying to drill down to is, how is the business going to be operated? Who's going to be involved in the management of the business to make this business successful? Now, this is not a comprehensive list. This is not a comprehensive list of what should contain a business plan. I mean, there's a whole workshop on creating a business plan, and there are tools and resources on our business website. So I'm going to encourage you to go and have a look at that at a later date. And so go onto our business website and have a good look at that, because there's a huge amount of information on there about how to create a business plan. I mentioned before that there's two key pieces of information, and that's the business plan plus the financial information. So the business plan not only demonstrates how you operate the business, it also going to show how the information it contains flows through into supporting the numbers behind any forecast that you provide. So as this heading says, yes, the numbers matter, but why do they matter? And so why do they matter? Well, firstly, you're going to be investing a lot of money into the business. So like any investment, you'll be looking for a return on that investment. So you also need to know that your business is going to provide you with an income that it's going to help cover your personal expenses and help achieve your personal goals. Secondly, before you commit to any borrowing, you need to understand the impact of that borrowing, what impact of that borrowing is going to have on your business. For example, is borrowing any money going to place your business under any financial pressure? And now, if the answer is yes, then you need to go back to your setup costs and look to see if you can reduce those, so you can reduce the amount of money that you're looking to borrow. Thirdly, lenders are seeking comfort that any lending we provide to a new business owner is going to be repaid. So for a prospective owner to provide that comfort, they need to really have a good understanding of how the numbers contained in any forecast have been determined. So the questions that you're likely to be asked by your business lender is, how are the sales figures being determined? And do they take into account any seasonality? Then we're going to ask, how's the gross profit margin being determined? And have you used any benchmarking? Then we're going to ask, how have your expenses been determined? So yes, your accountant is going to be involved in preparation of any forecast. However, any information the accountant uses in preparing the forecast needs to come from you, along with any assumptions that you've made in determining the forecasted figures. Now remember, your objective is to build credibility and confidence with the bank. The more you understand about the science behind the numbers, the easier it is going to be for you to answer any questions that the bank is going to ask. Now, the flip side to that is that any overly optimistic forecast with no supporting assumptions will essentially erode the confidence the bank will have about the financial viability of the business. So in summary, we want to lend customers money. Yes, we are open for business, but we're going to follow a process that has stood the test of time. And this process is being developed to help protect our customers. But more importantly, the process is there to help our customers achieve the definition of success. So there was talking about buying a business from a banker's perspective. Then I'm going to talk about selling the business from a banker's perspective. So, like Sam mentioned earlier, involve with the bank early. Okay? We need to understand what your plans are. We need to understand how you're going to be repaying any lending that the business may have, such as you need business loans, overdrafts, any credit cards. Now, when a business is sold, any income that's generated from that business is going to cease. So if you still have any personal lending in your own personal names, you need to understand how you're going to service that loan, service that lending. Okay. Now, if we're taking security against the assets of the business, we need to release that security. So you need to instruct your solicitor early, instruct your solicitor to advise the bank early to release that security, because that can take 2 or 3 days by the time we receive it. So we don't want to be receiving that information on the day before settlement to process that, because that potentially is going to delay settlement. Now, if you have leased premises, especially if you're in a shopping mall and you've had to sign a performance bond, then you need to release that bond. We need to release that performance bond. And to do that, we need the original bond returned to us. So if you ever sign a performance bond, make sure you put it in a safe place. If you can't find it though, we're then going to need a letter from the landlord to release that security. Now, once you've sold the business, and if you've got any residual funds left, then we need to, then we can refer you on to a will specialist to look at ways to invest that money. So that ends my presentation. So I'm going to now hand it back.
Rightio. Thanks, Anthony, and thank you, Sam. So we do have some questions, and I'll start, Sam, with you. The first is just around a question. If you're looking to buy a business and have maybe been referred by a friend, or have looking to meet with a business broker, what are the sort of things that you would be discussing at that very initial meeting to understand the client, and what information might they need to prepare for that meeting?
Yep, I think the most important is not only what sort of businesses are you looking for, but what you're not looking for. When we meet a buyer, we obviously scribble down a bunch of notes and we chuck that buyer into our CMS system. And in that system, whenever we launch a business for sale, our first step for anything else is that we send a generic flyer out to that database via email. So we're going to get you onto that database as a buyer. And I'm very bad at it, but I do my best, is we put as much notes as we can in the CMS. So we just met with Jane Smith. She's looking for a business in manufacturing industry. She has a budget of, she can buy up to $1 million. She has already talked to her bank. This is her accountant. So come prepared with what you want to buy. Come prepared with, obviously you're going to know what your background is, because we want to know all that stuff too. And that means when you inquire on a business, so you click the link on the email, you fill out an NDA, that doesn't mean you automatically get the information on the business. Sometimes it does, but I have an extra step in that I then put your name in front of my vendor and I go, Jane Smith has just inquired on this business. This is her background. I've actually met with her. She's looked at 2 other businesses before. I know she's got access to funds. And then the vendor will go, yes, that's fine, for that confidential information, including the name, to then go to that. So the more information we have about you, the better it is to present to the vendor, and the better chance of A, them getting the information, but then B, getting a bit of a head start, because the vendor already might quite like you, because I've said I've met with Jane and she seems pretty awesome.
Okay, thanks, Sam. Another question, Sam, of you as well, and probably just talking about the business broking fraternity. In terms of, do some brokers deal in, specialise in particular things? The question was around hair salons and as part of a franchise. So are you best to sound out a few, or if you approach a local broker, would you relatively expect that they could point you in the right direction if it's a particular specialised or niche type business?
Yep. Look, there are brokers, I think, up in Auckland that say they specialise in X and Y. I mean, down here we're a bit smaller. We do everything, but we have our cap with size. So franchises can be a challenge. The biggest hurdle in selling a franchise is the franchisor, who needs to approve the buyer. So we can get to a certain point in time where the business is almost under contract, and then we give it to the franchisor, who goes, "Oh no, don't like that person." Can be very challenging. So ensure you're engaging with the franchisor and you know the process. Some franchisors expect first right of refusal if they want to buy it back. But look, speak to a couple of different brokers in your region. Some of them, some of them do know a lot about franchises, some of them don't. But yeah, sound out a couple, but also have a chat to the franchisor. They do need to know that you're wanting to sell the business and you want to get them on board as soon as possible, because a broker probably won't want to go near it until you've done so, because they could put in 100 hours into it and then it gets vetoed by the franchisor.
Okay. And probably either of you could leap in, but I'm guessing Sam might have had a bit more, and it's regarding reassigning leases, support, or the potential holdups that landlords can put a fly in the ointment. So how are buyers best to prepare dealing with the existing landlord and getting leases reassigned in that sort of time frame?
Yep, I think we act on it pretty quickly. So as soon as we have the business under contract and it is subject to the landlord providing consent for the reassignment, is that we introduce the landlord to the buyer straight away. Because look, it can happen in a day, or the landlord can be a semi-retired individual who's in Hawaii for 6 weeks. So we want to get onto it very, very quickly. You need to have prepared I even say get your CV ready, your full background of who you are, and also a statement of financial position. That is what the lawyer will probably require, the landlord's lawyer, because they want to basically know that you're going to keep running that business as well as the vendor, so you can keep paying rent. So if you've got no background in this industry and they know that you're borrowing up to the eyeballs, that can be a red flag. We haven't had anybody decline it on that basis. However, it can cause a bit of a headache. So get all that ready, get it ready to provide to the landlord straight away, and hoping that it is going to get confirmed as quickly as possible. Yep.
So another question, can they refuse? I think that you've probably covered that. Question for Anthony, what's the requirement from the bank regarding landlord bonds and for the need to get it signed up, especially at shopping malls? Has that been and probably, Anthony, just to add to that as well, how in terms of putting together finance for the bank and a business purchase, just how many moving parts are there that need to be coordinated from the experience that you have had?
So to go back to what's required around financing the bond, that's a very good point. That needs to come into the startup cost of the business. So if there is a bond, that's like a liability, like an overdraft that the bank needs to approve. That if for whatever reason the business isn't successful, the bank or the landlord is going to have to come back to the bank to basically pay that money out. So yeah, that's all going to be part of the lending application. So how many moving parts? There's lots of moving parts. So that's where it's important that that preparation is vital, and that you give all that information to the bank up front, because if we miss something at the very start, that could take and it comes to light at the end of the application, that can take an application from being approved to being declined.
So I think thanks, Anthony. So if we just think about it, we've got solicitors on both sides, we've got accountants on both sides, we've got the broker, we've got the bank manager, we've got Who else have we got? We've got landlords. So yeah, that moving part, and it all just takes time. And I think being prepared early and well is going to smooth that. So on behalf of the ANZ team, thank you to Sam. Thank you. As you can see in the background, which is the real live Canterbury weather day. It's a lovely day here in Christchurch. Thank you to Anthony for your perspective from the bank, which is in the majority of cases, you're going to have to get your bank on board. So we'll sign off now. Thank you all for joining us.